Good evening. Welcome back to Lots of Growth. This is Kenny, and as promised, this is our September monthly review brought to you by yours truly. So, in this video, I want to run through my process first framework that I've been applying throughout the whole month. September was a month of testing my discipline. It's a discipline that I have been building up for over a year, and throughout the last year, I've had good and bad experiences of executing such said discipline. So, September was a month where I hit a good green. I went up to a green and then I hit a little bit of a drawdown. And I finished up by understanding my processes better and how to execute them better moving forward. So, I prepared a few slides. It's a departure from just me talking head and looking at some charts. We're gonna switch up the presentation style and we're gonna head on into our review mode. So I've got my equity curve here, as we can all see. It started out with a strong push to the middle of the month. Then we had a little bit of a sideways slash down move in the middle of the month, and then we powered back on, and then towards the end of the month there was a bit of a disruption, and then we finished the month with a bit of a flat. Overall, we had 17 trades, of which 13 are wins, resulting in 7.1 R net for the month. I think we're about 70% win rate. That is not the win rate, that is the routine score. I scored an average of 78% routine on my across the month. There were highs, there were lows, and a DSC of 87. All right, so I want to share with you what I have taken out of my routine and what I have taken out of the results that I got out of the routine. So first things first is inputs over outcome. Why I say that? Well, you can see here, these are the things that I do measure, the things that are within my control. I realize that the market will be the market, and as much as I like to control my input and always get the right bias, there are a lot of other things other than clicking the trade that matters to me more than just the trade. Ergo, having the habits and having myself tracked through my daily routines and my execution scoring, I get to see day by day where my highs and lows are. And obviously not every day is a high. When some of this may be too high, it's supposed to be quite zigzaggy. So I started off the month a bit weak. We had a little bit of a slow during the consolidation period, and then this was a total disruption to my routine, and that's why you can see I took a few days off from my execution. Whereas here in the middle, I was struggling with execution, but I was still trying to power through. So here is where I want to highlight the fact that because my inputs dwindled down to a 0, I was able to just auto disengage and not enter into risk with the market. This is something that I want to take away myself and for everybody watching here, that the moment I was aware that my inputs were not up to a good level, I was already disengaging myself from the market. And this was something more of like a autopilot. It's good to save risk. It's not good in trying to chase every last bit of performance. But then again, resting is part of performing. There needs to be a good balance of performing, showing up and being present, and also taking a break, having a reset, having a reboot, and then coming back strong. So that was the first lesson I want to show, because had I not disconnected from the market, it could have been way worse. And you can see that I'm still in kind of a bit of a slump at the moment. I hit 4R, 4R, and then negative 0.8 in the ranging week. And then I had a disrupted week, resulting in a flat. And then this last week, of which it was half October, half September, I had a negative half R. So I'm looking back to come back strong this month in October. It started out kind of flat, but I have all good faith that once my inputs are back in play, once my pre-sessions are in play, my meditation's in play, my visualization is in play, everything will fall back in place. So the one thing that I want to highlight is I am now controlling the inputs. And what am I controlling? Look at this number here. 4, 4, 5, 2, 5. That is the number I want to control. That is totally within my input control. I do not overtrade now. Should I take the wrong bias, I stay with it. I do not try and invent a second trade. The only thing I can think of once I take an incorrect trade is how little can I lose. That is a new thinking that I want to build, and it's something that I hesitated on in the last week here. More on that in my optimizing losses video. So let's move on to point number 2. Point number 2 is there seems to be a pattern of London being preferred by myself. From the 7R total, 65%, 2/3 of my profits are coming from London. Of course, 2/3 of my trades are also coming from London. So it only makes sense that the lion's share of it comes from London. But that isn't the only reason why I prefer London. The other reason is being that after looking at all my trades, I realized that the average duration is only 5.5 hours. But London itself, London trades on average finish in half the time of all my Asia trades. So because I'm awake during Asia and London, I find that sometimes my Asia trade runs into London. So why not go at London right there and then? This is something that I do need to reinforce by going through my data again. But the fact is, I'm quite happy to go for either. I think the win rate in both is quite similar, 70% across the board. But the whole time, that's the one thing that I want to put my finger on, you know? I want to get a good grasp of it, and I want to make sure that I go in the right session and I have the right expectation for that session. Now, takeaway number 3. In that middle slump period, there was this little curve down during the week. That's down to the ranging protocols. You can see there's a lump of missed losses and 3 straight losses here. Habits and routine were obeyed. The quantity effort was okay, but there was some poor context and bias, and the quality of effort needs improving. In what aspect? This is something that I want to define here, so that we are not going around circles or trying to reinvent the wheel at the pre-session. So establishing a ranging process, that includes identifying the consolidation in the range, is something that I overlooked in the 3rd and 4th October, Wednesday and Thursday and Friday trades. I was aware during my pre-session, I must say that much. When you review that video again, there were moments that I had pauses that I knew that, hey, I should be talking about this, I should be going down that road, but I just snapped and I just went straight I skipped a few steps and I went into execution. What I had skipped was these new processes talking about ranging risk, adjusting the risk down, and then waiting for the next trigger for the trend resumption. The trend has not resumed yet. No, it has not. So this is something that I want to also spend some time on away from the live markets to get a better understanding of my data and my edge. Because once I get the whole of this really well, I can trade both markets equally well Of course, ranging at a lower risk, but it just means that my payouts are going to start coming faster and faster. So those are my 3 takeaways for the month of September. And before I go, I want to share with you a quick run through of my best trades and my worst trades for the month. I couldn't pick one, so I chose a whole week of trades to share about what were good trades. Here we see 4 great trades. Why were they great? Well, mainly because they didn't go into much drawdown. 2 of them here. 3 of them didn't go into much drawdown. The London one did take a bit of a drawdown, and in fact, had I taken it from Asia, it would have been also in somewhat of a drawdown. So those are trades that I do like, and I want to point out here that this Monday was a trending trade. Tuesday was also a trending trade. Wednesday was definitely a consolidation trade, and Thursday a consolidation trade. So here I did manage to get the rhythm right. Something that I did not quite get right in the next weeks of execution, where I collected 3 worst trades. The Monday being the worst, because this was still in consolidation, and this should have been a buy because the continuation from the previous week was still a buyer. So here I wait heavily on the yellow line and waiting for that as a reaction to get out, and unfortunately I got wiped out. And then subsequently I went for the buy in the trend on London and got wiped out there, knowing that I should have gone for a seller here in Asia, but I took a buy again and I got wiped out there. So this would have been a series of not so good trades that I do not want to repeat again in October. So that would be a quick and cheerful roundup of September 2025. Before I leave you, I just want to have a quick recap. The 3 main lessons that we are taking away tonight. First things first, inputs over outcome. The intention of the action is more important than the action itself. So coming here to the video, to the pre-session, and just trying to tick the box, that's not what I want anymore. We've done that for September. This month, we're going to increase our quality. We want to increase the quality of our intention, first and foremost, and secondly, the quality of our decisions, whether it be in trend or whether it be in consolidation. Secondly, it seems that London is a more preferred session due to its shorter duration. I will need to investigate that further, but as it is, I will be looking to commit into more London trades through the month of October, maybe at a rate of 2/3 to 2 to 1. I do find good trades in Asia as well. And one thing I want to raise up is I do not want to avoid London just for the fact that it's got a very big pip range from here on out. We'll just go as the day take gives us, and we'll just follow the process. This first few days of October has been somewhat of a flat start. I want to be better, and that would include my lesson number 3, which is ranging protocols. I do know what ranging is. I do see ranging, but acknowledging the range, acknowledging what I need to do in the range, that's something that I want to work on this muscle, and I want to make sure that we get this right. Q4, October, November, and December. Now with that, I shall bring this recording to a close. I hope that you've picked up a few things. I certainly have. I reminded myself of why I'm doing this, the intention of doing this video itself, not the whole journey, not just the whole journey, but every step of the way. There'll be more of this coming along. I hope to be improving my quality of my videos and the quality of my visuals. And I'll see you guys in the next one, which is a daily pre-session, Monday morning, bright and early. Until then, this is Kenny. Lots of growth. Peace out.